This quick little video can probably save you hundreds or thousands if you don't know about this already, and you probably already wasted hundreds of thousands if you didn't know about this. Pretty simple. Do you know that the IRS, due to the 2020 Relief Act, have made your 50% write-offs in restaurants 100% write-offs? That means 100% all the way up to December 31st. 2022, you can write off 100% of meals and when you go to restaurants. And if the people around you didn't tell you this, people deal with finance or whatever the case is, get new people. But more importantly, information like this is not just everywhere. You have to have specific people helping you. And it's always about entrepreneurship and keep learning. You just have to keep learning. That's why we're doing Black Entrepreneurs Day, not only for Black entrepreneurs, but all entrepreneurs. Use this piece of information and save thousands of dollars on your business now and support local restaurants and businesses. Good luck. Peace.
All right. That was Daymond John, spilling the tea, giving out some jewels, the founder of FUBU, and promotion of his new Black Entrepreneur Day, giving Black entrepreneurs some tax tips. I thought it was really, really great, but he only kind of scratched the surface, right? So I want to go a couple layers down, about 3. I got 3 other tips to add on to this that will really make these tax law changes really, really powerful if you use them for your business. So come on over on the other side. Welcome to the Tax Rebel Show. My name is Kamari Ellis. I've been in the tax industry for over 20 years, and not just tax investment, financial planning, and all of that. I'm also an enrolled agent. What is an enrolled agent? That is what many people call America's tax expert, right? It's an IRS credential that gives me the authority to help taxpayers with all that matters with the IRS. So today in this show, our very, very first episode, I wanted to talk about what Daymond John is talking about, right? There's a lot of good stuff there. There's a lot of power there, but you got to be able to use it correctly. And, you know, he was just doing a broadcast of commercial promotion for his Black Entrepreneur Day. But again, I wanted to go down a couple more layers and talk about a few things that everybody needs to know in order to use this new tax law change properly in their business and to get the most bang for their buck. All right, so I wanted to talk about three things, right? What exactly is a business meal, right? What's the actual rule and the documentation around it? So let's jump into it real quick. Deducting business meals is deeper than just pulling up to McDonald's and grabbing a receipt when you pull up for your lunch order, right? I get a lot of my clients that do that. So I want to actually give you the real deal, and I wanted to pull from my notes. So I'm going to read from my phone real quick, all right? So when classifying or when determining if something is truly a business expense or any expense for that matter, but for this conversation, a business meal deduction, right? Number 1, it's about 5 things you need to think about. The expense is ordinary and necessary, which means that this is something ordinary to your business, traditional to your business, right? And it's also necessary for your business, okay? That's number 1. Number 2, this business meal isn't lavish, right? It's not at one of your super duper premier $1,000 plate steakhouses. Probably not the best thing to do, right? But it's an ordinary dinner. It's something that you could use to help promote your business, to help enhance your business, okay? Number 3, the taxpayer and or employee are present, okay? All right. Number 4, food and beverages are provided to a current or potential business associate. So this isn't just some boyfriend, girlfriend, lover situation and you just decide to have dinner and a meal, right? This actually needs to be really for business, okay? And I want to read this as well. When food or beverage are being sold, right? When you're buying food or beverages, and if you are at an entertainment outing, sports event, boxing, anything sports related, make sure that you buy this meal separate from the entertainment costs, right? Because entertainment cannot be written off any longer. That was changed in 2008 under the Tax Cuts and Jobs Act. So what's the rule, right? So this rule, again, I'm reading from my notes here, so excuse me for not looking you in your face. All right, so under this new rule, the term restaurant is a little bit more nuanced, right? Means a business that prepares and sells food or beverages to retail customers for immediate consumption, regardless of whether the food or beverage are consumed on the business premises. A restaurant does not include a business that primarily sells prepackaged foods, all right, or beverages, not for immediate consumption, including a grocery store, okay, specialty food store, beer, wine, or liquor store, drugstore, convenience store, newsstand, or vending machine. Again, I get clients that bring me all kinds of receipts for their quote unquote business meals. And by this, the official IRS rules, it wouldn't cut the mustard. So again, I wanted you to know that. I wanted you to know that. All right. And lastly, like this is the third major point here, documentation. Please, please, please have documentation for a lot of reasons. One, so you can make sure you write up everything when it's tax time. Two, to make sure that you're managing these things and making sure you're getting the biggest bang for your buck. Three, right, if you're ever audited, you need to be able to substantiate, which basically means show documentation that this thing actually took place. Okay. So there's a couple of things that I do personally when I go out to dinner and I do a bit or meal, right? Breakfast, lunch, dinner, snack, whatever. When I go out with a potential client, a business associate, I take a picture. I actually use my phone. I open up my QuickBooks app and I take a picture of the receipt. Okay. And on that receipt, I want to make sure there's a couple of things. And most all receipts are there, right? The date, right? The location, okay? Also, the cost or the amount of the meal, all right? Also, you want to document who the meal was with, all right? The name and the purpose and the potential outcome of this, right? So let's say I was meeting with Magic Johnson, favorite basketball player of all time, right? We're sitting down, I'm taking Magic to lunch, and in that, when I'm finished done doing the deal, right, or doing the breakfast or lunch or dinner Magic, I want to record what we talked about. What was the purpose? What was the outcome? Can Magic be a new client? Can Magic be potentially a referral source for me? Can Magic be an introduction of sorts, right? A sponsor to get me into some other rooms that I might not necessarily be in. I want to document that all on the receipt. And then I take a picture with my phone and put it into my QuickBooks. Now, QuickBooks is my preferred choice of weapon. However, you can use whatever you like. QuickBooks, Xero, FreshBooks, any of them work just fine. Even just taking a picture and maybe emailing it to yourself, making sure you have all the documentation on it. Okay. You're probably wondering, like, what's the big deal? What's the bottom line for all of this? Right. Great. Congress has increased tax deductions for business meals from 50% to 100%. Well, what does that mean? How do we put it in dollars and cents? Well, here's what I mean. Normally, let's say you would take a business associate, a client out to a meal, and let's say you spent $100. Before, you could only write off 50% of that or $50. Now, you spend $100 on a business meal and you get to write off the whole $100. That's a big difference. That's double what you were getting before. And so, with using it strategically, you could potentially take those same funds and leverage that money up to generate more business revenue. Listen, all of these tax deductions that Congress puts in place is for further economic expansion and growth. So they want you to spend these things in industries, i.e., restaurants, right? Because we know restaurants have been hit. If we get more money back into the restaurant industry, that's more jobs. More jobs means more people paying the IRS their taxes, along with the states and other cities around the country. So it's one big cycle. So keep that in mind as you're doing your planning, as you're getting your books in order. All right. So we can really maximize this tax deduction. All right. So again, I just wanted to piggyback off of what Damon John told you all about using that powerful new tax law change if you have a business. And again, just to recap, right? Know what a business expense is, know what the rules are, right? Make sure you are documenting those things. All right. Now, if you are a self-employed person and you need help with your taxes, tax planning, maybe even if you're fighting with the IRS, feel free to click the link in the comments for a discovery call. All right. I'm Kamari Ellis. This is the Tax Rebel Show, and I will see you the next time.